In a world chasing meme stocks and flashy growth, what if I showed you 5 U.S. companies quietly compounding wealth through rising dividends, strong balance sheets, and market-beating returns? We will see core stats, dividend growth payout ratio, stock performance first and third year, TTM chart, which is trailing 12-month, CAGR, which is compound annual growth rate, and many more. These aren't just dividend stocks. They're dividend growth machines that have outperformed the S&P 500 while increasing payouts year after year. Whether you're investing for retirement, income, or legacy, these stocks are built to last. So grab a pen, hit that subscribe button, and let's build your long-term income portfolio, one safe dividend grower at a time. Let's jump into the video. Company introduction. AI-powered giant with a growing dividend backbone. When it comes to combining future-proof technology with consistent dividend growth, Microsoft is in a class of its own. While many tech companies chase trends, Microsoft builds infrastructure and pays you while doing it. From dominating the cloud with Azure to investing heavily in AI through OpenAI, Microsoft is shaping the future of computing and monetizing at scale. At the same time, it has rewarded shareholders with dividend increases for 22 consecutive years. As of June 2025, Microsoft trades around $474.96 per share and hold a market cap of $3.53 trillion, cementing its dominance in global markets. The current dividend yield stands at 0.7%, and while that may appear modest, the dividend growth tells a real story. Microsoft has grown its dividend by plus 10.67% in the past year, and by plus 33.87% over the past 3 years, resulting in a 3-year dividend CAGR of 10.23%. On the price front, the stock has delivered a 1-year price gain of 9.69% and a 3-year growth of plus 20.47%, translating to a 1-year stock CAGR of 9.71% and a 3-year CAGR of 20.49%. With a 1-year total return CAGR 10.5% and 3-year total return CAGR of 21.49%, Microsoft easily outpaces the broader S&P 500. Valuation metrics. Forward PE, 26.18. PEG ratio, 3.05. Price to cash flow, 51.09. Dividend payout ratio, 24.94%. Growth in revenue. Revenue for 2024 came in at $500 billion, up 14.53% YOY. Cloud, subscriptions, gaming, and AI are all strong tailwinds. EPS has grown at a 5-year CAGR plus 126.97%, and the company generates immense free cash flow. Returns by year, 2016 to 2025. Best years include 2019 plus 53.81% and 2023 plus 56.33%. The average annual return over the past 9 years sits around plus 27.8%. Conclusion: Microsoft blends reliable dividend growth, AI-driven future expansion, and top-tier fundamentals. For long-term investors, it's a blue-chip powerhouse that delivers both income and innovation. Company introduction. A dividend king built on trust, innovation, and long-term growth. If you're looking for a stock that's boring in the best way possible, consistent, stable, and quietly growing your wealth, Johnson & Johnson is the name. With 62 consecutive years of dividend increases in global leadership in pharmaceuticals and medtech, J&J is the gold standard for long-term, low-volatility investing. As of June 2025, Johnson & Johnson trades around $157.10 per share, with a market cap of approximately $377.99 billion. Its dividend yield sits at 3.31%, offering a stable and attractive income stream for conservative investors. But more importantly, J&J continues to grow that dividend, with a 1-year dividend growth rate of 2.21% and a 3-year total decrease by of minus 3.75%, translating to a 3-year dividend CAGR of about 4.76%. Price performance has also held strong for a defensive stock. Johnson & Johnson has gained plus 0.23% over the last 12 months and minus 8.17% over the past 3 years. That puts its 1-year CAGR at 2.21% and 3-year CAGR at minus 3.76%. while the total return CAGR, including dividends, clocks in at 5.35% 1Y and minus 0.83% 3Y. Valuation and dividend metrics. Forward PE, 14.62. PEG ratio, minus 0.43. Price to cash flow, 18.69. Dividend payout ratio, 55.35%. Annual dividend, $4.96 per share, 2025. Financials and growth. In 2024, J&J posted revenue of $88 billion, supported by its pharmaceutical pipeline, surgical products, and acquisition-led expansion. EPS has grown at a 5-year CAGR of plus 200.15%. J&J is focusing on oncology and medtech innovation after spinning off its consumer unit, Kenvue. Yearly returns 2016 to 2025. J&J's best years included 2017 plus 24.43% and 2021 plus 11.44%. Its average annual return over this 9-year stretch is roughly 7.58%, reinforcing its value as a compounding machine. Conclusion: Johnson & Johnson is a cornerstone holding. It's not flashy, but for dependable income, low volatility, and dividend growth backed by decades of discipline, it's one of the safest stocks you can own. We've covered two titans, one shaping the future with AI, and the other protecting your wealth with 60-plus years of dividend growth. If you like this video, subscribe it and comment, and to turn the bell notification on so you never miss a new video. But now, let's unlock the real power of income investing, monthly paychecks, industrial dominance, and one of the most explosive dividend growers in all tech. Stick around. Stock number 5 might just be the biggest surprise of this entire list. Let's dive back in. Company introduction. The monthly dividend powerhouse, real estate you can rely on. Nicknamed the Monthly Dividend Company, Realty Income, stand as a beacon for income investors seeking stability and compounding cash flow. This real estate investment trust, REIT, pays shareholders every single month and has raised its dividend for 30 consecutive years, even through recessions and market crashes. As of June 2025, Realty Income trades at around $57 and 64 cents per share, with market cap near $52.5 billion. The stock offers an impressive dividend yield of 5.52%, making it a top-tier choice for passive income. Over the past 3 years, Realty Income has grown its dividend by 3.06% and 5.52% in the past year alone, driven by rising rental income and smart acquisitions. Stock performance reflects its defensive nature. It's down minus 3.89% over the past 12 months and plus 8.71% over 3 years. That translates to a 1-year CAGR of 6.87% and a 3-year CAGR of minus 5.01%, with total return CAGRs of 13.14% 1Y and 0.11% 3Y, including reinvested dividends. Financial and valuation metrics. Price to FFO, 13.99 times. Dividend payout ratio, FFO base, 74.23%. Annual FFO, 2024 $3.46 per share. Revenue, 2024 $5.27 billion, up 29.23% YOY. Portfolio and growth. With over 13,250 properties across the U.S. and Europe, leased to blue-chip tenants like Walgreens, Dollar General, and FedEx, Realty Income has recession-resistant cash flow. Occupancy consistently exceeds 98%, and new acquisitions fuel long-term growth. Yearly returns, 2016 to 2025. Historically delivers 8 to 13.4% average annual returns, including dividends. Best years in 2019, plus 21.41%, and in 2021, plus 24.17%. Conclusion: if you want monthly income, stable returns, and dividend reliability that doesn't quit, Realty Income is the REIT to own. It's built for retirees, income investors, and anyone who wants to get paid while they sleep. Company introduction. The iron backbone of American commerce, with growing dividends. When you think about investing in long-term infrastructure, Union Pacific, UMP, is a powerhouse. This 160-year-old company is one of America's most vital freight rail networks, connecting industries, supply chains, and commerce across 23 states. But beyond the steel rails lies a financial engine that delivers impressive dividends and capital returns. As of June 2025, Union Pacific trades at around $223.37 per share with a market cap of approximately $133.46 billion. It currently offers a dividend yield of 2.4%, but the real strength is in the dividend growth, a key reason why income investors love this stock. UNP has increased its dividend by 2.32% in the past year and 2.45% over the last 3 years, translating to a 3-year dividend CAGR of 2.95%. Stock-wise, UNP has delivered a 1-year price return of minus 0.91% and a 3-year gain of 0.4%, putting its 1-year CAGR at minus 4.56%. Including dividends, total return CAGR clocks in at minus 1.98% 1Y and plus 2.24% 3Y, an impressive figure for a transport sector giant. Valuation and financial strength. Forward PE, 17.83. PEG ratio, 3.40. Price to cash flow, 22.89. Dividend payout ratio, plus 48.20%. Annual dividend, 2025 $5.36 per share. Revenue, growth, and efficiency. In 2024, Union Pacific posted revenue of $6.03 billion, with EPS growth rebounding thanks to lower fuel costs, improved pricing, and efficiency gains. UNP's operating margin stands strong at 40.27%, and free cash flow remains healthy. Returns by year, 2016 to 2025. UNP has averaged around 10.67% annual returns over the last decade. Key performance years, 2019 plus 33.70% and 2023 plus 21.61%. Conclusion: Union Pacific is a time-tested freight giant that delivers rising income, resilient profits, and capital appreciation, all while moving America's economy forward. It's a rock-solid dividend growth machine for long-term investors. Company introduction: the tech dividend monster, high growth, high yield, high confidence. When it comes to combining explosive tech growth with massive dividends, no stock does it better than Broadcom, AVGO. The semiconductor and infrastructure software leader powers everything from smartphones to data centers, AI servers to broadband, and it rewards investors with a dividend that's as aggressive as its growth. As of June 2025, Broadcom trades around $248.70 per share, with a market cap near $1.17 trillion. Despite its meteoric rise, it still offers a dividend yield of 0.95%. But what's jaw-dropping is its dividend growth, a 1-year increase of 13.02% and a 3-year growth of 13.1%, giving us a 3-year dividend CAGR of 12.9%. Among the highest in large-cap tech. The stock has surged plus 20% in the past year and plus 372.08% over 3 years, delivering a 1-year CAGR of 72.84% and a 3-year CAGR of 63.24%. Including dividends, its total return CAGR hit 74.83% 1Y and 66.72% 3Y. Numbers that few companies on earth can match. Valuation and dividend metrics. Forward PE, 29.41. PEG ratio, 6.17. Price to cash flow, 52.88. Dividend payout ratio, 83.64%. Annual dividend, 2025 $2.36 per share. Revenue and growth metrics. Broadcom generated $51.57 billion in 2024 revenue, growing at 44% YOY. Its margins remain stellar, with an operating margin of 40.29% and huge free cash flows fueling future acquisitions and dividend hikes. Yearly returns, 2016 to 2025. Massive gains in 2019, plus 29.05%, 2023, plus 104.19%, and 2024, plus 110.49%. The average annual return over the past 9 years, 36.18%, putting it in elite company. Conclusion: Broadcom is not just a dividend stock. It's a tech juggernaut with elite fundamentals, breakout momentum, and shareholder-friendly policies. If you want growth and income in one high-powered package, Broadcom should be on your radar. Let's quickly recap the 5 powerhouse dividend growth stocks we covered, each one built to deliver rising income, strong total returns, and resilience for the long haul. Microsoft MSFT, a tech titan riding the AI wave with a rock-solid balance sheet, low payout ratio, and consistent dividend growth. Johnson & Johnson J&J, a dividend king with over 60 years of raises, backed by pharmaceutical innovation and medtech dominance. Realty Income, the monthly dividend RIT that delivers stable income through recession-proof tenants and smart acquisitions. Union Pacific, UNP, America's freight backbone with strong operating margins and a shareholder-friendly dividend policy. Broadcom, AVGO, the ultimate dividend growth tech play, offering massive capital gains and one of the fastest-growing payouts in the S&P 500. Together, these 5 stocks cover multiple sectors: tech, healthcare, real estate, infrastructure, and semiconductors, providing both growth and diversification. They're ideal picks for building a long-term, rising income portfolio that can weather volatility while outperforming the market. Whether you're planning for retirement, reinvesting for compounding growth, or just looking to build dependable income streams, these dividend growers offer a strategic edge in 2025 and beyond. If you found value in this breakdown, make sure to like this video, subscribe, and hit that notification bell so you never miss the next big opportunity. And let me know in the comments, which one of these dividend stocks is already in your portfolio? And which are you buying next? This is Evercrest Capital, helping you invest smarter and grow richer, one dividend at a time. See you in the next video.